You're watching Famous Dave on YouTube.
Hello, welcome back, folks. And what a crazy market we've had, complete with multiple sell-offs. Every rally seems to get sold, multiple down limit days, and it's just been really scary out there. I am amazed that the VIX has gotten up to where it is now, which is right around 70. And even though I keep saying it's a sale, it doesn't seem to operate that way. Let's talk about some of the competing forces here that are at work on the short VIX products. And the first one I want to talk about is in the title of the video called Backwardation. So let's go into that for a second. To do that, I'm going to pull up the chart on the VIX term structure, and you can see that here behind me. Let me get out of the way. And we can see now we're coming into expiration next week in the VIX. And what that means is that this future here is going to get forced up to the price of the VIX if the VIX is higher than it. Right now, there's about 8 points between the front month future and the VIX. However, most of these products now, because we're just about into expiration, are based on the April future. And right now, there is over 20 points between the April future and the spot price. That is a big problem for us for shorts if volatility stays up here, because that 20 points is going to get pulled. That future is going to get pulled upwards toward the spot price if volatility doesn't come in here. Now, also, backwardation is the relationship between the VIX futures. And we can see from this chart that there is, if you look at the bottom of this chart here, we can see currently there's 23% backwardation between the front two futures. And many people, when we're in sharp contango, many people don't place much stock on this number. To use a pun, coming into expiration, they start to look forward to the next relationship. But you can see the next relationship here also 21% backwardation. And that means that a product like VXX is going to get pulled upward. It's going to increase in value by over 20% per month if we stay in this situation. Now that we've been in backwardation for a few sessions, it seems like it's seemingly harder and harder for us to get out of it. The futures in the VIX, there's no arbitrage between the VIX and futures. So the futures are free to do what they may, and the VIX futures continue to stay way lower than the VIX. Now, in my mind, that speaks to the fact that people see vol coming in the future. However, the way it actually operates mechanically on VIX ETPs is it pulls their value higher. So we're in a situation where we've got, on one hand, the backwardation and the fact that the futures, the roll yield, the fact that the futures are way lower than spot is putting pressure on these products to move higher. And on the other hand, we've got volatility at a record level, which would talk to it coming in sometime very soon. So these two forces working on products make it very unpredictable what the volatility products will do in the short term. Now, in the longer term, we can feel confident that these products will move lower. However, these products have really, really exploded to the upside, and people that got long them have been very successful being long volatility, especially the leveraged products. Like if we look at UVXY or TVIX, they have just exploded. Look at TVIX here just for a second. Has gone from, what was it? It started at around 30, I believe. The low was 38, okay? Now, and it got up to somewhat over 400 already today. Let's take a look at the daily chart. And we can see TVIX got up to almost 440 today. So from 30 to 440. So it went up by a multiple of 10. So 10 times its price. So remember when we were talking about selling options in products? Now, of course, TVIX is not optionable. But if we talk about UVXY selling options and how we need to plan for it to make a 100% to 200% up move. Well, this is why, folks. This is the perfect storm, and it did happen. UVXY 1.5 times leverage is not going to have as much of an explosion as TVIX, but still, when we look at it here, we see it coming from 10 up to 70, 69.80. So just 6 times higher than it was. So just incredible moves by all these products. And the way the term structure is set up right now, unless we get a big move down, these products could stay kind of at the level they are at right now. We really need to kind of unwind this big stretching out of the term structure that we have currently going on here if we're going to kind of quote unquote get back to normal. So it's a tradable environment. Nobody really knows what's going to happen. There's money to be made on both sides. Rest assured that if you can weather the storm, these products will move lower and will eventually take out those lows that we see. For example, here, that $10 low in UVXY. And I guess TVIX, it was 38. But it could take some time. I have shown on the chart I have shown the interesting chart that Edward put up that showed where we were back in 2012. I'm going to get to your questions in the chat in just a moment. I just want to pull up this chart where we were in a backwardation situation for a period of time, and that could happen. During that period, we were in backwardation for a couple months. Now, we don't know. We could come out of backwardation, early next week. We just don't know what's going to happen. And, we did have to go back to 2011 to find this sort of situation, but they do happen. And so let me, once again, go ahead and pull up this chart for you here. So it's scary out there. I've put on many put spreads, and the good thing about putting put spreads on is you can only lose what you put into it, so it can't go negative on you. However, in a few cases, it feels like I have lost what I put into it, so that's not good. Okay, so here's this is what I was looking for. So this shows, and this is a chart which is in percentage terms, but it shows a period in 2011 where we were in backwardation from August through December, and VXX continued to get pulled higher over that time period. Actually, I'm not sure if we were in backwardation that whole time, but we were definitely in elevated volatility for that period. Okay, so let me get back to, let's go to the chat for a second. Yes, VXX going higher and higher, or VVIX going higher and higher. Hey, what's up, guys? Happy Friday to everybody. Thanks for joining me. So the June 2016 spread. So VC analyst, I had a similar spread on to that one in June, and what I ended up doing is I ended up dumping it and rolling it up. So what I ended up rolling into myself personally, and like I said, I'm not making specific recommendations to anybody, but is a spread that is 50 days out. So I went to VXX, and I bought the May. It's actually 49 days out right now. And I bought this May spread. I bought the May 36.33 spread, and I paid a buck. I think I paid $1.15 for it. And it's funny because these options just came on yesterday, and I was the only open interest in there yesterday. Let's see if we pull up the open interest. I'm probably still the only open interest. No, so a total of 25 is traded on that strike and 10 this strike. So not a whole lot of open interest out here. But you do notice that as far as volatility levels that this month is cheaper on the chart than the other months. So that's one of the reasons I picked this particular week to buy stuff. But I had a spread on similar to yours. What I had on VC Analyst was I had the April I was long the April 30 27 put spread, a little bit closer to at the money than yours, but it was down to like 50 cents. Let's see what it is right now. I think I paid 85 or 90 cents for this, and it was down to 50 cents, 40 cents, 30 cents on the open yesterday. So I ended up selling out of the spread at like, I think 46 cents and moving to this May spread, the 36-33 spread. But this still might be too soon. I mean, 50 days might not be enough for this stuff to come in. But, what's going to happen is at some point, stuff is going to reach an equilibrium here and stuff is going to turn around. The market just can't stay at this high prices, it seems to me. If we go to the SPX, we can look at where the VIX is coming from. Remember, the VIX comes from the SPX option prices. So it can be interesting to look at those SPX option prices. So let's do that right now. And when we see on the screen on the right side of here, we can see both the volatility level plus the expected move for these various options. So if we look out here, I mean, these are very high expected moves. Look if we go out to May, 49 days out, it says a 472 point range in the SPX. So that would bring us all the way back to like 3,000 or all the way down to almost 2,000. And you know what? That doesn't sound that crazy considering how much we've moved around in the last few days. We had a situation where everybody was buying the dip. Then we went to a situation where we've been limit down, and every time it rallies, people sell the rally. And it seems maybe today we're gonna turn that corner where we reach some equilibrium where a rally can be sustained. Who knows? Maybe we keep moving lower. It's hard to tell. However, it feels like to me that there are some bargains out there in individual equities that we can look at. And I was watching this Theo Trade video that and it wasn't one of the ones with Don Kaufman. It's one of the ones with one of their other guys whose name is escaping me. I apologize that his name is escaping me, but let me pull up this video. It's just the one Theo Trade video from yesterday. And he was going through just kind of which stocks went down the most, that sort of thing yesterday. It's this video here. It says making sense of a market sell-off. And let me put the link to it in the chat here for you. But, and the insight that he had in there was that these cruise lines have really just gotten hammered. Kikos, is this the end of the world? No, it's not the end of the world. Corey, yes, thank you, VC analyst. Anyway, he was showing some of these like Carnival cruise lines. So if we look at Carnival, and this is only one of the things that's gotten really hammered by the symbol CCL. It was at one point it was 60, and now it's like 15. Just obliterated, right? And there's a number of these issues, and it seems like we could get a little pop off of some of these. I like this one. It seems like there's some bargain hunting to do around here. Now, certainly stuff could move lower, but when you've gone from 50 to 15, how much lower can you go? Look at the options actually in CCL for a second. I know I'm getting off track here. Somebody was recommending that I don't, that I just stick to VIX stuff, but I'm like many traders, I bounce around a little bit. We look at the options here. CCL, you could sell the 10 puts for $1 here, 7 days out, and it seems that would mean that if you lose on this trade, you could be put the stock. You could end up paying $9 for Carnival, which seems like that would be a good purchase, $9. And definitely these have been hurt the worst. Yes, cruises could be dead for ages, and that's why these have gone down so much. But, we have people who are looking normally for I'm sure you guys have this too. People come up to you and say, well, I have a 401k at work. What do you think I should do? Can I give you $1,000 and you can make it into 2,000? This sort of thing. And this whole year or the last 2 years, I've been very hesitant to tell people to like start in the market right now with stuff elevated as it was. But right now, stuff isn't elevated anymore. And although it can certainly move lower, bargain hunters are going to start coming into the market at some point here. Now, it may not be today. It may have to go down another, 2,000 points in the Dow, but at some point, an equilibrium will be reached. And we're going to have to move from there. So I'm looking to see what I can take advantage of. So today, right now, VIX down 8 points. That would be a huge day, except for the fact that everybody is weary and leery of the fact that this rally might get sold, right? That's what everybody's thinking. Every rally's a sale. And, once the normal retail guy catches on to the fact that every time it rallies, I should just, buy a short ETF, or every time it rallies, I should get out of my stocks. Once Joe Retail gets it in their mind that that's what you do is you sell the rally, that's when that strategy will stop working. So we'll see if this holds. I get the feeling that there's money on the sidelines here that's waiting for some sort of signal to jump back in. And yeah, there's Boeing. Somebody in the chat's talking Boeing. Feel free to list other ideas of what you think might be bargains. Let's take a look at Boeing here for a second. Airlines, another consumer thing that, people are canceling flights. My sister was supposed to go back to Italy, canceled flights. People are canceling conferences. They're moving stuff back. Any stuff that is discretionary spending, like corporate conferences, cruise lines, all that stuff is getting canceled, and it's going to get reflected in the earnings, and that stuff is going to be lower. However, the market is really, really discounted some of this stuff, and now is as good a time as there's been in a very long time to just pick some stuff, put it in your pocket, and forget about it. That's for, in my opinion. And I very seldom make actual recommendations. I try to give the two sides of the coin and let you figure out what you want to do. Let's take a look at the Boeing chart here. So, down from 350 to, and I know that Corey guy was talking a lot about this one, as I remember, but boom. The other one, of course, perennial favorite that people have gotten just destroyed on this year is the MJs. Now, the MJs have gotten just obliterated. And how much is the whole industry going to go under? Well, if we have I think people are still going to want these products if the whole thing goes under. I was watching an old episode of The Sopranos the other day, and they said, well, our industry and certain aspects of show business are recession proof. Well, I think people using medical marijuana might be recession proof also, but obviously that industry has just gotten destroyed, so it's very hard to jump in there. But at some point, I was looking at this MJ. Let me get out of the way here. Got down below $10, and YOLO. I mean, these things. Where did this come from? YOLO came from 26 to 6. That's just in the last 6 months. Now, obviously, this has not been around for a super long time, but I guess it's been around since June or something like that. But, I mean, that's just devastating. Look at ACB here. But, this stuff is all going to pass at some point. And VIX 67 is a huge sale. However, we have to remember once again, if you're selling TVIX or UVXY here, you're not selling a 67 VIX, right? You're selling April VIX futures. So you're selling a 46 VIX, which is a huge sale here. And I know I've been harping on that, and I know it's gone against me, but it is going to turn around, and this medium to long term is going to be a huge sale. The reason I picked in VXX, the reason I picked this, and I only have a little bit of it on, but the reason I picked this May 33-36 put spread is it's closer to at the money. Just 2 sessions ago, that was at the money to out of the money. So will this be the high in VXX 49.27? What do you guys think? Let's go to the chat. Do you guys think this will be the high, or do you think we go lower from here? I'm interested to see. I'm interested to take stock. One of the reasons I wanted to come on today is just to kind of reassure people that things are okay. So June 20 is doable for VXX. I don't know. It really depends, VC analysts, on how long we stay in this backwardation. Because remember, every time we rebalance in backwardation at 20%, that's pulling the bar up. I really enjoyed the last video by Brent. Backwardation is really high. I want to wait a bit. There you go. Okay. Thanks, Stefano. Another person says VXX goes higher. Yeah, the trend has been higher, right? Look at this chart of the market. Let me get out of the way once again. But look at this chart of the S&P. I mean, it has been going straight down, and there's nothing really to say that it's over with just because we happen to be right here right now, right? The trend right now is down. Until it's really broken, the trend is the market continues lower. Now, I don't have the cojones to actually short the market right here, but maybe that's the right thing to do. I don't know. I feel like we will turn a corner at some time and change this trend, but right now the trend is lower. Short UVXY 65 to 68. I think if you have the ability in your account to sustain yourself in a short in these products, like I said, if we get another spike next week into expiration, it will pull these higher, and that could provide an opportunity to put a short on. But it also could move against you if you're short right now. However, this could be the high in UVXY. 69.80 could be the high. It's hard to tell. Yes, M2 is 48, and M2, Svasta, I'm trying to pronounce your name, Svasta. M2 is crucial to us right now because M2 is what makes up UVXY, TVIX, VXX. We are approaching expiration, so it's over 3/4 of all these products are made up of the M2 April future in the VIX. If I go to my handy dandy ProShares website here, and that will show us the composition of UVXY as of yesterday. We're going to see, it's going to show us some swaps, but we're going to see, look, the composition is right there, 23,000 of the April futures. That's what these are made up of. That number is key. And, the thing that is tricky, because this is certainly tricky stuff right now, the thing that is tricky is, once again, that number is way below the spot price. So, theoretically speaking, the VIX could drop 20 points without TVIX or UVXY going lower, because all that would happen was that would put us back kind of to flat on this curve. It would be beautiful if we could maintain our gains today and go into the weekend on a positive note, but we need to unwind. We need this space is going to contract between the front month future and spot. No matter what, it has to contract coming into expiration. So they're going to get pulled together. Which way they get pulled together is going to determine which way some of these products move. Now, remember, it's kind of moot what happens to March at this point. It's interesting to look at it on the chart 58, but as the days go by, these products that March, they're not going to be composed very much of, right now they're not composed very much of March at all, but that's going to become less and less as we go into expiration. For example, right now we looked at UVXY yesterday, had 4,000 futures of the March and 23,000 of the April. That's going to get cut today by more. But we're going to start looking at this relationship between April and May coming up next week. After expiration on Wednesday, we'll go from all April to starting to have May. And if we stay in this backwardation, it's going to pull. Not only are these products being pulled up, these products are mostly being pulled up just because spot is higher than them. But the relationship between these two futures and backwardation means that this essentially these products get pulled up a notch or two, and then they stay up at that higher level no matter what happens until we go back into contango and they get pulled back down lower. All right, so what you're saying is the weighted average is 48.25, right? So if you take basically 3/4 of 45 and 1/4 of 58, you get 48 and change, right? So that's a great way of looking at it as well. So if the weighted average is 48, then that means that we've got 18 points between the spot VIX and the weighted average, which is a lot of room. 18 points is a lot. I would love to see that number contract. Until that number can contract, it's... Sorry about that. Is that better? You hear me better? Until that number can contract, the distance between spot and the futures, we are in trouble, and it's going to be unpredictable what happens. We can't tell if this stuff is getting pulled up or down when we are in such huge backwardation, because it would seem obvious if it wasn't for backwardation and all this stuff, this would be an obvious short. The VIX at all-time highs, or all-time highs for a long time, but because of the fact of the term structure in backwardation and the fact that the futures are so much lower than the VIX, it offsets them. Is that better? How's the volume, guys? What's up, Ed? I have an upstairs neighbor who's mad at me, so I'm kind of trying to not make too much noise. He's having some health issues, so I'm going to make sure he's okay. So that last 2-month backwardation that I highlighted was in 2011. And I don't think it was in backwardation for 2 months, but it was a volatility event. I think what happened was it was in backwardation, then it came out briefly, came back in, that sort of thing. But what happened was VXX was being pulled higher. But it doesn't mean that this one has to last 2 months. It doesn't mean that this one could last like 3 years. But the end result is that if we're going down by 2,000 points a day, it's not going to take long for us to reach some sort of equilibrium, right? Because otherwise we'll just get to zero. So I'm heartened by the fact that we do have a rally today, and once again it might get sold again, but I have to think that we're going to reach some sort of equilibrium, and I have to think that we're getting kind of close to it. It's all bad news, and from extreme negativity, even if earnings are bad, we already have discounted these stocks so much recently. It's a very strange thing to see. When you look on there, you can see VIX down 10 now and the front month future up. That's an extreme situation, but that just speaks to the fact that there is tremendous pressure for the front month future to converge with the VIX here. So even with the VIX down 10, that future is up slightly. But it's a beautiful thing for short vol people seeing the VIX down 10. So we will definitely take that today. How is the volume level? Are we okay? Here, let me pull up the chart again for you if you didn't see that. Yes, it was 2011. And this was a tweet by Trade Volatility a few days ago. Here, let me pull this thing up again. That would be, and I've had him on the show before. He's a good guy. Let's see if I can find it here again for you. Trade Volatility. Here we go. And thanks to Edward for apprising me of this. Here we go. So this is basically what this just illustrates is that the VIX as we stayed in backwardation, VXX continued to get pulled up every day. It's showing it up, several days where it's up over 20% in a day, and it got pulled up. But the other thing that you need to notice about this chart is ultimately the situation ended and we went lower, right? So if we can just hang in there, I've been short all the way up, so I will maintain that all the way back down. Does my upstairs neighbor have Corona? I'm not sure if he drinks beer. No, he's just, it's funny. I'm probably like the youngest one in the building here. It's like kind of like a retirement community. So there's that. But it's the middle of the day, so you can talk relatively loud. Highest weighted 2011, 43. Thanks for that. Yeah, so, this is a high level. I remember I was talking with somebody. I remember in 2017, we had a period where the VIX, it popped briefly to 14, and everybody was like, they sold it immediately, like, oh, it's 14, and it just got smashed back down. So, we're coming from a place where, like at this period here of the summer, the VIX 14 was a high level, and it just got smashed back down here. Well, here you can see it. This is so this is back in 2017. Look, we get a spike. We're like 10 in the VIX. We get a spike. This is a weekly, so it lasted, I don't know how much of the week, but it got up to 17 and it, boom, smacked back down. We get another spike here this week. It spikes. It goes to 14.5 and boom, smacked back down. So this is a very unusual period when this is something that you will remember forever, this market activity. And, there's that fear of like, oh, what happens if like the market almost completely recovers and I didn't buy anything down here? It's balancing that with losing all your money, which we don't want to happen either. Some people were surprised with gold lower, but people are selling whatever assets they can get to get cash. People surprised Bitcoin lower once again. I think most people who are watching this are savvy enough to not be putting a whole lot of eggs in the Bitcoin basket. For my opinion on Bitcoin is I just don't know how to value it well enough to trade it. I don't know what its value is, and it doesn't have any intrinsic value to me. I don't have compression on there, but I just turned it up a little bit. Is that good? I need a pop filter, I think, on here. This is a SM58. It's a basic rock and roll microphone. Yeah, the really amazing thing today is that VVIX up 20. Let's see if we can pull up a little time in sales in the VIX and see where that's coming from. Let's see. So what are you saying, Al, that it's the dollar that's making oil seem to be going lower? That's not what I want. I want time and sales. So, all right, here we go. So we've got somebody buying. So a put buyer. Biggest trade right there is a put buyer. We've got them crossing the 50 calls. We've got May 21 put buyer. And let's go over this just for a second, because I know I had some questions on this. The VIX, and Edward would like this. What we're looking at right here is options on the VIX, and there's been some confusion on this. Options on the VIX, there is no underlying for the VIX. So when you trade these options on the VIX, now I know several retail people, when they trade these options, they're not going to be trading anything against them. They're just making a bet based on these options. But to make a market in these products, you are using the future, whatever month's future, as the underlying. If we look here, for example, at these March calls with 11 days to go. If we go to the at the money, now Thinkorswim centers these options at whatever the price of the VIX is as opposed to wherever the futures are. But if you look at the at the money call, the 65 call with 11 days to go is it's basically 315 bid at 574. If we go out to November and we look at the money call, it's 50 cents bid at 145. If this was a stock, you would never see farther out months cheaper than the close months, because if you ever saw that, you would just buy the farther out month and sell the close month. However, one of the big no-nos of trading VIX is to trade calendar spreads in VIX options. These VIX options here, hedge with the futures. You never want to trade calendar spreads. What you should do is you should hedge. If you're trading any of these monthly options, you should hedge them with that month's futures, because in that they're hedged that way, and the futures are based on, are in the term structure and are all moving all over the place. It's very hard to predict what's going to happen month to month with this stuff and how this stuff is going to move. So I would caution you against trading any sort of calendar spreads if you're dealing with these VIX options here. Now, ultimately at expiration, the futures are going to be the same price as the VIX. So in a sense, it's moot sort of that you hedge these with VIX futures, but as they make a market on these different options, remember that these are hedged with VIX futures. No Bitcoin. I'm not familiar with no Bitcoin. All right. So what are you guys thinking? Are you short the market still? Are you looking to now in VVIX? Once again, let me just get back to this. This is an amazing number in VVIX. That is a huge number, and we just don't see the spike like this. We just don't see it, and I think that this is going to speak to the fact that we've had a lot of margin calls, people blowing out, all this kind of stuff. I was investigating why VVIX is so high today. It obviously means that there's buyers in VIX options, and I was trying to investigate which options they're buying, because if they're buying puts, it obviously means something completely different than if they're buying calls. I always have a hard time evaluating the meaningfulness of VVIX. All right, so here's the top trades in the VIX today. Let's take a look. So, calls in the middle of the screen. We've got call buyers. So the May 45 calls. So, yeah, I mean, it's up because we've got call buyers. Look, we've got May 45 calls, paid the offer. March 42 calls. So they're anticipating this stuff staying up, and they're buying protection here. And you know what? Usually when we hear about it being inefficient to buy protection in the VIX and to trade the VIX, the common thing you hear in basic trading classes is you don't want to buy UVXY or VXX to hedge your portfolio. But when we're in steep backwardation like we are right now, all of that drag is canceled out. So as a hedge, it makes sense right now because we're in steep backwardation. So all of that stuff that usually helps the people that are short this for it to go lower has been flipped around. Now, the important takeaway about that, of course, is that it can't stay like that for very long. We will come out of backwardation and everything will quote unquote back to normal at some point. But in the meantime, the VIX is an effective hedge for big firms and people who are hedging long portfolios. Well, you can, let's see, when people talk about Bitcoin, they talk about being a replacement for the dollar. They don't realize it's based on the dollar. Well, they have exchanges where you can buy Bitcoin with other stuff, right? When VIX declares what's going to happen to VXX, when Trump declares a national VIX virus pandemic in 1 hour, which we've heard rumors of that, what's going to happen to VIX up or down? I mean, a gut reaction to me would be that it pops on that news. Would you agree? I would agree. I would think that it would, if they declare a national pandemic, it sounds like something that would pop on, but it's unpredictable. I can't predict what it's going to do. However, full disclosure, I am short VXX right now, and my bet is that it will go down in the next 50 days from where it is. That's my feeling. How much can VIX go up? I guess. It can keep going up. The thing is that at a certain point you get to a situation where, VIX is basically, once again, coming from the SPX option prices. And so somebody owns somebody owns SPX options at these prices, right? 73 vol, the front month, 77 vol. And as long as these people can make money owning these options, then the prices will continue to stay up. But if the market stops moving around like crazy, it's already up pretty high. If it stops moving around like crazy, then these prices will come in. So for example, for the next 6 days, they're expecting a 238 point move in the S&P. So that would mean, up to 2,800 or down, and that kind of sounds reasonable, right? We've been moving like 100 points a day, so it would make sense in the next 6 days. It could be up or down like 238. And it's basically going to come down to how much this market moves around. If stuff starts to calm down a little bit, then VIX will come in, volatility will come in. If we continue to go straight down like we've been doing, it's going to continue to stay up. But, the higher the VIX gets, the harder it is to maintain that level of movement. What do I reckon the VIX price will be in 5 months? Well, let's look at the futures and see what the futures are predicting. So if we go to the term structure and we look, I don't know, what would you say? Let me get out of the way here. So April, May, June, July. So let's say July or August. It's the term. This is predicting that we have a 30 VIX in 5 months, and I would say that that's a reasonable assumption. I'm going to say 25. The VIX we can go back into contango just at a higher median level, and this stuff can start decaying again. If I would expect volatility, any positive news should bring stuff around, and just news about the virus in general. We're in a pretty big panic right now. This is like a monumental period, and I just, I like coming on here because I just, if we just kind of get together and talk about this together, then it seems less daunting in a way, and I'm pretty close to buying some bottom picking here for equities, and I'm trying to decide if I want to buy maybe a little bit of the TQQQ or just buy the SPY a little bit. A massive, well, it doesn't take a massive move up for the VIX to go lower. It really just takes the market moving around less. If we just sit in one spot for a while, then the people that own these options in the SPX, they lose money on them. So the next week they're not going to buy as many. It's unclear if it makes sense to go long VXX. That's why there's buyers and sellers on both sides. VIX could stay here for a while. It's, like I said, Esteban, it's a balance between the VIX is at a high level, so that's probably going to go lower. The futures are lower than the VIX, so that's pulling it higher. So it's kind of like a balancing act right now between the two forces pulling at each other. So where it goes from here is anybody's guess. Place your bets. My trusty steed. A lot of people suggest TQQ can go belly up, but I feel it would have happened already. I generally agree with that. I've talked about that before, how like TQQ, because of those because of those circuit breakers that we have in place, that really makes it less likely that TQQ can go belly up, but TQQQ. I think that I'd have to think that the most volatile, it's possible that it could be behind us. The most volatile, there's like we've had 2 down limit days over the last week. It may be behind us. We don't know. I don't know. You can place your bets. We're in a downtrend until further notice, until we've seen some sort of rally from here. It's VIX 89.53. I mean, the numbers almost seem meaningless after a while. It's craziness. ETF better than an ETN. I would look for the one that is. See, VIXI is less liquid in options, and one of the ways you can tell if a product is more or less liquid is to just go ahead and look at the open interest in the options. So if we pull up VIXI here and we go to the options screen, okay, so I've got my screen set up so that you can see the first line in is what traded today. The second line in is the open interest, and you can see, so here's VIXI open interest. Now remember, also VIXI is a shorter term type futures thing, but here is the open interest in VIXI, and then let's compare that to VXX, and you're going to see that VXX has a lot more options trading, a lot more liquidity. So I wouldn't be too concerned about ETF versus ETN because they operate in a similar fashion. Now there's some different tax stuff and there's fine print in all of them, but I would be focused more on the liquidity. And the reason why we look at the open interest in options is because the more stuff's trading, the more willing the market makers are to trade stuff mid-market or inside. So, when I come in, if I want to buy an option, say in VXX, let's take a look at let's look at this April 45 call, okay, or 46 call. Okay, the market is 8 bid at 8.15 right now. If I want to buy one of these, I'm not going to go ahead and pay 8.15, right? I'm going to try to bid in the middle. And now it's 8.05 bid at 8.15. So that's a better example. So if I want to buy one of these, I'm probably going to go in and try to pay 8.10 for it. Unless we're moving around like crazy. If we're, if this is moving upward really quickly, then I might be more aggressive and I might seek to pay the offer. In this case, there's only 10 cents between the bid and the offer. So that's a fairly tight market for an $8 option. But most of the time in VXX, you can buy stuff or sell it pretty close to the middle of the market. And I would even try to buy stuff just slightly off the bid. Like here, for example, on this option, 8.05 bid at 8.30, I would try to pay 8.10. Why not try to pay 8.10 really quickly, maybe move it up to 8.15? Because a lot of times people will trade with you in the middle of the market, especially on spreads. And that can be a huge lifesaver. The other thing with illiquid stuff is that a lot of times if they can see when your order comes in, if it's an opening or closing order. And if it's a very illiquid thing, they'd be more willing to trade with you if it's an opening order because they know that you're going to be stuck with that and you're going to have to get out at some point. So this one is a notoriously illiquid product, DRIP. Okay, the market right now is 582 bid at 612. Look at these open interests. There's like nothing there. So the add to money is around 600. Look, no open interest. 35 days out, 0. And you want to be really careful with things like this because, if you bid mid-market, they might let you get in, but when you try to get out again, you're in big trouble. And this is one of the reasons why I switched out of UVXY, because UVXY, it seems like ever since that Volmageddon, it's become less liquid and stuff moves around a lot. The markets are wider. The open interest is less. I mean, this is not a lot of open interest. UVXY is a pretty well-known product. And look at the open interest in April. It's very sporadic, I would call it. Let's see. Seems like selling against backwardation is swimming against the current. Good. Yeah, that's a good analogy. Certainly. Certainly there's a lot of pressure pulling this stuff up. Now the flip side argument is just that we are in a spike and it won't stay this way forever. How long will it stay for? We don't know. So if we were to go out, to buy something in VXX, what if you give yourself till next January? It seems that fall should come in between now and the election, right? So what if you were to go out to like January and to pick something like the January 34-30 put spread, something like that. You're giving yourself 300 days. You could pay $2 for the spread and you could double your money. Now, 300 days out, it could take 300 days to double your money. It could take less. But putting your money in a trade like this, it gives this stuff time to iron itself out. Because even that 2011, 2012 example, the stuff lasted for a few months. Well, what I was saying, it was that right up before, we have seen in the term structure in the last couple of months before this big panic, the month right before the election was more volatile, but after the election, which would be November or later, it would seem like we would get some relief. But I don't see us staying up at 70 vol like all the way from now till November. I just don't see that happening. But it's very hard to tell. This is like a unique event out there, and I don't want to. I've been wrong so many times in the last month that I don't want to come on and make like sweeping statements and just be proven wrong again. But it's fun just to come on here with you guys and kind of just talk through some of this stuff. It's been an ugly thing. My retirement stuff is in cash right now, and I'm trying to decide if now is a good time to maybe nibble at some of this stuff, or how about this, plan ahead. Maybe what happens if this rally gives up today and we end up down on the day, way down on the day? Would that be a good time to maybe buy something? We'll have to see. What happens in your mind if we end today up and then we have 2 days up? It's been a while since we've had 2 days up. It seems like that. It seems like the Super Bowl of volatility. Exactly. Pelosi's family's first act. All right. So yeah, I was watching that video and I was looking at Carnival Cruise Lines as a something that's just gotten destroyed to nibble at. And somebody was saying in the chat that Carnival may have bad business for a long time. Oh, look, it traded up to 136,000. That's interesting. It must be bad data. Let me get out of the way. Look at this data point on here. I don't think that's right. Oh, I'm in the wrong thing. Carnival. Hold on, let me get the symbol right here. Carnival Cruise Stock. CCL. At some point we're going to turn around and there are going to be bargains out there. I think this looks interesting. I'm always tempted to jump into this MJ stock. Look at YOLO here, down to $6. It's gone. I mean, what's going to happen? Are they all going to go under? Is every MJ going to go under? Look at this MJO that never trades, down to $24. And I was looking at this MJO. Look how the markets aren't that wide right now. Before they were like $3 wide. Look, this is trade 135 shares. These guys started this thing, and it's got to cost money to to operate it. And if you have 135 shares a day, they can't. It's got to be burnt. They've got to be burning through cash with that one. MJ, 1 million shares. I mean, this stuff is just, it's gotten so destroyed. There has to be somewhere where it's a buy, right? Or is it just going to go to zero and end? Look at, all right, so I know that Tilray had bad news and was down a lot today. Tilray down to below $3, huh? Let's look at CGC. CGC from 59 to 10. That's not good. CGC has been a leader several times in these rallies. Look, I remember this rally here and then this one. This has been a leader a lot of the time. But, I mean, all of these are just, they're not able to get funding. They don't have, they're not, the current government of the United States is not fans of these Afria down to $2. I mean, it is just ugly, ugly out there in MJ land. But is now the time to maybe speculate on some of this MJ stuff? It's hard to say. GW Pharmaceuticals. Let's see what GW Pharmaceuticals is doing. Yeah, it's I mean, it's tough. It's tough out there. I mean, I was long Aurora for a while, and that didn't work out. I'm glad I'm not long it anymore. But, is Aurora, is it a buy right now? What is it, 74 cents? Let's look at Aurora here. 75 cents. I mean, my feeling with penny stocks is usually they're penny stocks for a reason, and I pretty much consider anything under $5 as a penny stock. But I mean, look at that; it's just gotten destroyed, just destroyed. This industry so many people have lost money. This was the most popular stock on Robinhood for a while, and it's just gotten just demolished. That that VIX being positive is. I think that will scare a lot of people away from selling this volatility. For me, I'm short VXX right now. I've been short the whole way up. I'm going to keep staying short. I'm stubbornly staying short until it goes back down. So there you have it. VIX now down 12. Pretty big down move, but it certainly could go higher. But I'm short the VIX right now, so we'll see what happens. I certainly, how much cash to keep for spikes? I would have, I know, too bad I didn't say short Tesla, I know, but I wouldn't want to buy, I still don't want to buy Tesla here, but yeah, that's another thing. It's very frustrating. Icon, look at Gush. CUK. Hold on 1 second. So that's the ADR. I think that's the ADR, and the other one's listed in the US. So I don't think there's a difference between CCL and CUK. I'm not sure what the difference is, actually. So I have to go somewhere else to find that difference. Carl Icahn is buying Occidental. Look at that. It's gotten just wrecked, too. I mean, how beautiful would it be to buy some of these and just and have them just come back a little bit and make any money back that you lost. The other one I've been looking at is this M&K, which has stayed pretty strong this whole time. M&K. How much cash to keep for spikes if you're short VXX? I would keep a lot of cash, trusty steed. I would keep. You shouldn't be trading VXX with a lot of your portfolio because it's a volatile thing. So I would keep bullets on the sidelines for a rainy day, so to speak. But yeah, M&K, another stock that this stock has been consistently profitable. It's just they got caught up in that whole Purdue Pharma opioid thing, and they've gotten wrecked. But I don't know. There's a lot of opportunity out there. If somebody is brave enough to step up and buy some of these dog stocks, it will work out eventually. It's just that are you willing to step in there? The other one that I always recommend for people to buy, USMV, low volatility ETF. Now look, this performed relatively well. Look, it's still higher than it was at the end of 2019, or I'm sorry, at the beginning of 2019. This has performed pretty well to the downside, and that's why you buy this one, the low volatility one, because it performs pretty well to the downside. But I'm not a huge fan of buying TQQQ just because it does decay being a triple leverage product, but buying the S&P here, I don't think you can go that wrong. And some of these individual issues might be even more interesting. Let's see. Thoughts on XOM? I don't know, City Walk. I'm not an oil trader, so I don't know what to say about that. Let's see what oil's doing today. So we did see it go lower yesterday. I knew that. It's come back a little bit today. If we go to the daily on or the 10-day on oil, so that's kind of what started everything off on, on that Monday, and or that Sunday night. That was Sunday night, and that really started everything off. And it's trying to rally. Looks like it's trying to rally. XOM. I think Exxon will survive, definitely. The U.S. government likes Exxon. I like the name SMH. Shake my head. I mean, that's another one that's gotten hammered. It hasn't gotten hammered as much as some of these other things, though. There's opportunity out there, folks. All right, I've been blabbering long enough. So how's things? So SD investing is in Italy right now. How are things over there? Are still in lockdown? Now, you're south of Lombardia right now, right? So, but how's things in Italy right now? My sister was supposed to go over, but she had to cancel her trip like everybody else. Breeze S says, market makers seem to price lower strike VXX options with lower implied volatility. That's true. Volatility products, it's called a skew to the upside. Volatility products are the opposite. After the 1987 crash, stock indices started having a skew to the downside. Now, this is due to the fact that I think it's called kurtosis, that they have if something big if there's going to be a big move in the S&P, it's going to be a crash move to the downside. The more violent moves are always to the downside, and to compensate for that, after the 87 crash, they started putting a skew in where the out of the money puts were higher volatility than the out of the money calls, and it was on a skew. And the VIX products follow in those footsteps, except the opposite, because the biggest risk in a VIX product is that big spike to the upside. You don't get huge spikes to the downside. You get downside moves, but you don't get huge spikes. And because of that, the out of the money calls are relatively much higher price than the out of the money puts. And you'll also notice that if vol comes in, those prices go even lower as we move down the skew. And once again, it's the opposite of the S&P. As we move up the S&P, prices are lower. We can pull that up and illustrate on the screen. Now, Thinkorswim doesn't always have completely accurate prices, but it still should reflect the skew. And once again, it wasn't always like this, but after the crash, they started putting in stuff like this. There's current circuit breakers came from the 2013 flash crash. All right, so this is going to show implied volatility. And we'll see if this is, so you can see as we move up in the calls in the SPX, prices are lower in volatility. Like if we look at this strike 14 days out, if we look at the 2900 strike, we've got a volatility of 39. If we look at the money strike, we've got a volatility of 69. And if we go down to, the 2360, we've got a volatility of 80. So that's a normal skew that has been around for a while now in these indices. If we go to VXX, we've got a reverse skew. So as Breeze so correctly put it, this has the effect of crushing the call spreads. And it makes the put spreads more, less of a value because when you get way down to the end here, to the very bottom, it doesn't operate the same way. But what happens is the option you're buying when you buy a put spread has a higher volatility than the option you're selling. So you're giving up a little edge. And also because these are hard to borrow, they're going to center them slightly lower than normal. So essentially market makers know that you're going to be coming in to buy put spreads as opposed to selling them. You're going to be buying puts as opposed to selling them. So when we pop, they raise the option prices for puts way up. And when we start to go back down lower, they know that all the people that bought puts when we were in a spike are going to come back to sell them to them. So they're going to take, as we move lower in VXX, they're going to take these option put prices down lower, just due to the fact that they know that people are going to come and sell them to them when we're down and buy them when we're up. Robots trading other robots. Okay, so the answer from Italy is you're locked at home. Situation still confused. Everything's going to be all right. And it's your piece in Italian. Everything's going to be all right. Robots trading other robots, indeed. But, this is all based on human emotion in the end. This seller, robots, people, when it's big money concern, people are only going to let robots have so much of the decision making. The actual big decisions are being made by humans here, and it still is based largely on emotion. And if we look at the spread between the spot and the front month and the second month future, we see it coming in a little bit here. This is remarkable. VIX down 11 points. I mean, when was the last time? I know we've gotten some big spikes, but when was the last time we saw the VIX down over 10 points in one session? And we'll see if it holds here or not. That's the big question today, I think, for us is, does this rally hold or not? And the other big thing we need to see, I think if we can see a situation where we get like 2-3 up days in a row, that's going to be a signal to a lot of people, I think, to start buying this market. If we can see, even if we can just see kind of like flat for a couple days and then maybe an up day, that's going to be a signal for people to start buying this market. I'm not saying we're there yet, and it's a little bit too early, and I think most prudent traders would say maybe it's too early to even be shorting volatility here because of the dynamics I just talked to you about. But if we can see a couple days of a rally, or if we can see this rally hold and then the rallies hold. Let's see. I don't buy it, Dave. Wall Street pays programs big dough to change algos on the fly. Maybe you're right. I feel like if I was a big fund manager, well, obviously there's some people that just have algo systems running in the background. They commit their money to algos, but it would be interesting to see how much of that is going on. I know a lot of it is, but I would think that, like, as far as big decisions on whether to keep selling or not, there's humans' hands behind it. So, but once again, I would be interested to see. We know that there's been a trend towards automating the market. How far along that trend have we come? It seems like I would like the U.S. government to be working more on the science of this vaccination stuff than on stimulus stuff and lowering interest rates and all that stuff, because the market's down on fundamental stuff. It's down on the fact that earnings are going to be lower because of this crisis that's going on. And stimulating firms isn't going to change the realities of the fundamentals. Like when the market opens. Well, man accounts. Okay, so it says, like when the market opens or closes in big, so various options, rewind, changes lightning fast. Well, that's not based on humans, no, but it's the big decisions about what they want the algos to do are obviously still run by humans, and the emotion of humans saying like, oh, the market's down, I'm going to get out of my 401k, or I'm going to stop putting money in the market, or I need to switch to bonds. I believe a lot of those decisions are human driven, and I think there's still a lot of human hand in the market. But yeah, certainly when if you watch options trading and you watch the markets minute to minute, most of the play, when you just watch what's going on in the markets, the actual mechanics of what's going on is like 95% automated. But the decisions behind what those mechanics are going to be accomplishing as far as position wide, portfolio wide, I believe is still, of course is still human decided. The mechanics of just of making a market in a stock. Okay, you have an order book here, you've got a bid coming in, you've got an offer coming in. The markets of just churning through paper, handling customer order flow is very much automated, as you said. But the what makes this market like go down, limit down day after day, I believe is based on human emotion. And, it's a debate that it's going to be hard to solve right here. There's no way to really prove it, I don't think, one way or another. Statistically speaking, I know that stuff has become more and more automated over time. Flash crash, robot to robot. Yeah, the flash crash is definitely evidence on your side of that debate, man accounts. That was all, it was just computers. That was amazing stuff, that flash crash, 2013. And that's what put these particular circuit breakers in place. And I think the circuit breakers have been a success so far. As we start to sell off here, folks, I just saw we've given back a little bit just as we talk. It'll be interesting to see if we hold here today, folks. Let's see what time we have it. So it's 2:30. We've got a little longer. It's interesting to see if we hold. For the S&P up 70 right now. The VIX has come in a lot for it to be up 70. It's come in almost 11 points. That's encouraging to me. I'm always looking for signs that things can be better here. So I guess I'm probably going to nibble away a little bit at some of these equities down here. And but we'll see. TQQQ is only up 3 now. I saw TQQQ was down to something like 40. Let's pull up TQQQ really quick before I get out of here. I saw TQQQ was down to 40 yesterday, I believe. Let's see where the low for it was. Thing is, you feel like an idiot if you're long a triple leveraged up product and we're tanking, because it feels like you just stepped in the way of something. The other day I bought this, I paid 63 and it went all the way up to like 70 and came all the way back down. I ended up selling it 65 and change, so I only ended up making $2 on it. But when I could have, it was this right here between 310 and 311. I bought it here somewhere, and then I saw it go all the way up to 70 overnight. It was back down, and I got out of it luckily before it tanked lower. I got out of it here, made my $2, and then it tanked way lower. That was like pretty much one of the only trades I was really proud of. So after hours, it got down to 38 and change. if we had a big sell-off today, I would be tempted to scoop T-triple-Q. I just, I get the feeling that people are going to start to nibble at down moves again soon. Yeah, Ed, that's an awesome idea. I love that. You get the... someone give him a medal. Sounds like the best comment of the day. Find out what I'm doing and do the opposite. You'll make $1 zillion. That's hilarious. Well, I'm short VXX right now, so you can buy it and you'll make $1 zillion. Or how about this? You guys tell me what you want the market to do, and I'll do the opposite of that, and then you'll be guaranteed that your trade will work. How about that? So if you want VXX to go up, I'll sell it. If you want T-triple-Q to go down, then I'll just buy it, and then it will work out for you. It's fine, Ed. I'm not sensitive. I was a floor trader for a long time. I'm used to being made fun of. All right, guys. Thanks for watching. Thanks for sticking with me. Please consider giving that $1.99 a month to become a member, because I'm thinking of that would be awesome. Dave, do you think market makers push market faster if they are net long? Market makers, all right, so this is a good question. Market makers, there are certain, if you're in a very illiquid issue, there are certain small moments of time where you might be able to have an effect on things, sort of, but it's very hard for market makers to really have too much of an effect on anything, because the problem is that you can run into a brick wall. You might make a certain market and you might raise something or something, and all of a sudden someone comes in and tries to sell you like 3,000 of something. So I think people tend to overestimate market makers' ability to really affect the market all that much. Certainly for me, standing in the pit, there were some times when I was the only one, or there were two of us in the world making markets on some illiquid stock, and we could. Thank you for being on Patreon. I really appreciate all the Patreon supporters. I haven't forgotten you guys, and I'm going to come up with something cool from the show, whether it be t-shirts, mouse pads, ashtrays, something cool to distribute among all the Patreon supporters, because you guys have been really awesome to me. But I think that market makers have a more limited effect than you think. Certainly, they widen the markets out sometimes, and you can tell that, like, between all of them, it's kind of an unwritten rule that will leave stuff wider. But especially nowadays, back when we were all standing in the pit, when the market makers were all standing next to each other, there was definitely much more of an ability to kind of manipulate things, move price around, that kind of play games. And, I was trained how to play games with stuff and be scummy. But it's hard when you've got something that's listed on like 5 different places and it's all this electronic stuff. It's much harder to work together, because what you really need to do if you really want to, to manipulate price, and that's a bad word, not even manipulate, but if you want to affect price, you really have to work together with people. And it's very hard to work together when you're at separate terminals in different places of the world. Yes, more interviews. Yes, member Spencer, I have to listen to my members and do what they say. So you want to hear more interviews? Let's do that. You want to hear more about the SIBO? Let's do that. In the meantime, it would be nice if fall would come in a little bit. All right. Thanks for watching, guys. I will see you next time, and best of luck to you.
You're watching Famous
Bye.
Dave.